Alright, hey everybody, welcome back to another Stonks Maxxing episode, day 115. And Merry Christmas, Happy Hanukkah, one of those days where it's, I think, both the holidays celebrated on the same day. Yeah, I was definitely at home for a bit. Now I'm back on campus. Grind never stops. Okay, I want to take a look at Walmart, maybe some fashion brands, discount retailers. I'm going to this thing called the NRF. So these people are talking. I wonder, Crate and Barrel, is that a publicly traded company? Okay, it looks private. Aldi Tapestry. Tapestry sounds familiar. Okay. Okay, so it's the holding company that owns Coach Kate Spade. Amazon. Nordstrom. Right, I have that somewhere here, I think. Uniqlo. Alright. Best Buy's on there. BJ's Wholesale. Okay, and then Amex is there too. Yeah, it's impressive. I wonder if it's going to be at the career fair. Cool. I do want to work in finance. Victoria's Secret would be cool. It would be really cool to work for Raising Cane's, actually. Sounds pretty fun. Kohl's, Lowe's, Pilot, PVH, Victoria's Secret, Wayfair. Oh, okay. I was thinking Victoria's Secret. I think I got that confused with Tiffany's, like the diamond brand, but now I'm starting to realize I think this is actually the women's underwear brand. Cool. Alright, yeah, I'll take a look. Oh, Zara's also hiring. I wonder what types of roles. So I don't see anything on here. Okay. Yeah, that's cool. That's cool. All right, I'm gonna go wash my hands. Wash my hands. Wash my hands. Okay, so let's go to discount retailers. I would place them in this space. Okay, Walmart. We'll do SEC Edgar. Go there. Search filings. Let's see what we got. Walmart. So Walmart Inc. I think. I know Walmart. I think they own both Sam's Club and Walmart stores. Let's go right to management. So they end their fiscal year on October 31st. I wonder what fuel means. I guess that also includes their if Walmart has gas or something like that. It's interesting. Okay, but comparable store sales, I guess that's a pretty big metric used in the retail sector. Okay. Right, so I think it should be an aggregate of all of the same stores. So the way I think comparable sales works is you just compare the growth of a single store from one period to another. And I guess in this case, it's the 3 months of October, September, August. So probably comparing sales from July, June, and May to August, September, and October for 2024 and 2023. Okay. So it does seem like they are breaking down their capex, which is interesting. And here is Walmart US. Okay, wow. They do break this down into pretty detailed stuff here. Let's take a look at what we can find. So net sales. I'm gonna actually go into, so I don't have any numbers here. Let's just open up like a healthcare. Yeah. I know I have numbers here. Consolidated. Calendar comparable sales increase, unit counts at period end, retail square feet at period end. Walmart segment, so net sales. $109,419. So that's $109 billion. 7.5. That is $114 billion. So that's about a $5.4 billion increase year over year in revenues and net sales just for Walmart alone. So percent change. Let's take a look. Is this the same number as we get? So 5%. Okay. Probably, so they just rounded up. Year over year. Call it percent year over year. We have calendar comparable sales increase. I actually don't know what this percent is representing. Let's just try this 5.1%. Operating income 4,981 5,435. Okay, so this is, let's take a look at the margin. Okay, so yeah, margin's around 4.7, 4.6%. I wonder what unit counts are. Oops. And then retail square feet at period. Okay, so internationally, $30 billion. It's a lot. So maybe unit counts, that's like a measure of how much stuff is still in the stores. 4606, 698, 699. So there's a decline in 1 million of retail square feet. Okay, e-commerce sales starting to grow pretty strong too. And then US international. Okay, so net sales. This is the same exact thing. Oops, I did not want that. $8,022. Percentage change from comparable period. Okay, so they don't actually have a calendar comparable sales increase, but let's do 1117. Oops. Percent margin. Unit counts 5454. Wow. So there still is a decent amount of expansion that can be done internationally, it seems like. Just based off square footage. That's what I'm looking at. 8%, right. Operating income. Operating income as percent of sales. Unit counts, 5454. Okay, so this is 5294. This would be 271. Got it. Alright. BVD sales. Okay, well, thanks for the report. I guess that makes sense. Sam's Club. Okay. Yeah, I think it seems like Sam's Club on its own is a pretty big powerhouse. Compared to Costco, I'd imagine it's a lot smaller. I'm going to take a look at Target and Costco next. I feel like that would be a good comparison. Okay, so 21,998, 3 months ended. Calendar comparable sales increase. See, what do I want? There we go. So it's same thing, it seems like, as things above. All right. So net sales percent year over year. Let's do 2.9%. Okay, 3.8%. So it does seem like Sam's Club is growing. 59593. $634. Okay, so unit counts 599 and then 80 million. It's 600. Yeah, and then do we want to include the excluding fuel? Okay, that's fine. I like excluding fuel. Damn. Okay. So it seems like fuel brings in about 2 billion, 2.6 billion, 2024 year ended, or quarter ended October 31st. Okay, and then 18,900. All right. Let's do 412, and let's do 437. Okay. Percent margin. So it's, I think, very similar. Oh shoot. Okay, this is what I gotta do. Nope. Shit. Nice. Okay. Record date, payment date, capital resources. Yeah, I wanted to see what's their CapEx spending was for. I thought that was actually very interesting. Oh, okay. So they also have Walmart US sales by market. Interesting. Mexico, Central America. Got it. Grocery and consumables. I swear there was a, here we go. So total CapEx spend. Let's take a look. CapEx spend. Oh, okay. Oh, it's 9 months. Yeah, it's okay. Supply chain customer facing initiatives, technology, and other. So this could be maybe models, clubs, including expansions, relocation. Maybe we can get some read-throughs from here for other revenues for companies. Okay, supply chain. All right, so 8014 9652 4610 267 4740 and then 48. Wait a minute. 8014. Okay. 1872 2167. Some. Well, actually, let's do 14674. Nice. Total CapEx. So that's 9 months. Yeah, that's a decent amount. If we break down the segment revenues, I guess this could get pretty interesting here. Oops. All right, so we have grocery. Oh. Grocery, general merchandise, health and wellness, other categories. Okay. Wow. So surprisingly, in the US, I did not know this, but Walmart, majority of their revenue does come from groceries. I wonder what they consider health and wellness. Maybe like the pharmacy business? 14173 and then 26579. Okay, so I'm just gonna sum this up. Okay, interesting that they don't break it break this down by products. Canada. My best guess is they do not sell groceries here by much. Nice. Okay. Sam's Club. Grocery and consumables. Fuel, tobacco, and other categories. Okay, so it seems like this is dominated by fuel though. Categories, home and apparel, health and wellness, technology, office and entertainment. But yeah, I wonder if they include the food stuff, like their food court menu items in here. 73164 602 566 1313 2084 and 3523. Oops. Huh. So it's oh right, that's not what we want. Okay, net sales. We want 566 1313 2084 235 and 125512. Okay. Nice. $3.1 billion was in e-commerce. Okay. Yeah, it's good to know. So it seems like with Walmart, their operating income is around the 5%, like 4.7, high 4% range to 5%. And this is just Q3 of 2023 and 2024, which I imagine is pretty cyclical, this business. But they are a pretty big net sales. So if I add I think it's 160 billion, 68 billion. All right. Let me just double check if these numbers are right. 168 to 159. Okay, so you have a total increase of, in this case, 9, pretty much 9, maybe like $8.5 billion. Okay, 8.5 billion. I think if we were to divide this, like a 90%. Wait. How do we get the growth rate here? I was trying to do it in my head, 5%. Okay, 5% growth. So 8,000 divided by 16. Yeah, it's hard to do in my head, but I'm gonna have to improve that sort of mental math stuff. Okay, let's see. How is the stream doing? Nice. So it's going pretty strong here. Let's take a look. Merry Christmas. Christmas, Andre. Merry Christmas, Andre. It's good to see you on the stream. Good to see you on the stream. Okay. Let me take a look. Okay, nice. It's still going, still going. All right, Target. I think Target would also be interesting to look at. Yeah, so it seems like their sales are relatively flat. Expenditures. So they also are spending less on earnings. Okay. Or not earnings, but what's it called? CapEx, PP&E, credit card profit sharing. Interesting. Pension benefits. Comparable sales change, drivers of change in comparable sales, number of transactions, traffic, average transaction amount. I guess, okay, that is maybe two things to break down. It's good to know. So I would say this is like volume, and then this could be your average selling price almost. Stores originated comparable sales change. I don't know what that means. Stores originated, digitally originated. I have to double check. I can ask what GPT says. I'm imagining this is probably like in-store sales. This is probably e-commerce. And it seems like the actual change here is overweighting the negative change here in percent amount, but also probably in dollar amounts as well. So you kind of see a growth despite negative in-store sales. Originated. Okay, other. Source to guess, got it. Gross margin is interesting. Okay, so they are able to provide this detail. Inventory shrink. I don't know how does that help increase gross margin? Merchandising, I have no idea how that also helps gross margin. Okay, so this could be a good time to ask ChatGPT. I feel like this is actually pretty important stuff. Can you describe how inventory shrink digital fulfillment and supply chain and merchandising can help / hurt Target's gross margin? Oh, okay. Product mix, okay. So what does inventory shrink refer to? Also merchandising. Thefts, damage, okay. Fraud, administrative errors, sourcing, pricing. Okay, seems like maybe inventory or merchandising is this catch-all term for the idea of how to select and optimally price in-demand products, but also high-margin products. That's my best guess. So I do like how they break down revenues like this. This is actually very helpful. And they do end pretty similarly. So you just have 2 days in November as opposed to ending on August 31st. I'm not entirely sure why that is, but let's October 28th, 2023. I imagine it's probably like the last day, the last Friday or something, and what, not the last day, but maybe like the last Friday or last day of the week. 6019244204606 30 sales. $4003. Ah, okay, no, it's not. I was about to say apparel and accessories would be their biggest revenue segment, but it doesn't seem like that's the case. Food and beverage actually is. Same with Walmart. So I never realized with these stores that the food and beverage segments were actually the most. I always thought that it'll be either the apparel or just general merchandise. So anything that you buy from any of those shelves, like toys or maybe home equipment. I guess it's probably a smaller market with, yeah, home furnishing and decor, household essentials. I guess when you combine all of those goods together, that is actually more than, oh, totally forgot. Beauty, food and beverage, hard lines, home furnishing and decor, household essentials, and other. Okay, yeah, that's good to know. Grocery and consumables, grocery, general merchandise. Okay, so they don't break down apparel here, unfortunately. And like what that general merchandise could be. I think with Target, their apparel and accessories are all private label, or mostly private label. 226591731. 5 billion 4715 30. It's also 30, whatever this is. So 25228, yeah, okay. And then credit card, profit sharing, TD Bank, Oops. Do not want that. Okay. Credit card profit sharing. Okay. So it seems like it's probably less volume on their credit cards for this quarter. Oops. Okay, so comparing to Walmart, Target actually, oh, shoot. Okay, yeah, that's right. Walmart, I think we measured 160 billion in revenues for 2024, quarter ended October 31st. This is pretty much the same, quarter ended November 2nd, but it's 25 billion versus 160 billion. I want to say if we divide 25 billion by 160 billion, what do we get? I say we carry over 2 times 6 is 12. So it would be actually like 15-ish. So 5 times 6 would be 30. What's 9 times? Yeah, I'm trying to think here. 9 times 6. 50? 54. Yeah, this is, my mind is like swirling right now. We take 25566. Let's simplify this. Once do this in our head, we could extend this out by 0. So now we have 2 by 1 600. Oops. Times 2. Yeah, I think this would be too much. If we do like 15% times 1.5. 1 times 5. 6, 5. 30. I think like 19% then, right? Wait, 9 times 6 is 54. 9 times 1 is 9 times 1 is 9. 9 plus 54 is maybe like 18. I'm just gonna fuck it. 15%. So it was 15%. Wow. All right. I cannot do math for the life of me. I gotta go back to the long division textbooks. Okay, so 15% of Walmart's revenues. Yeah, that's not much. Do we expect the market cap to be the same? Target market cap 60 billion. Walmart market cap 744 billion. So 160 billion divided by 25 billion. Yeah, okay, so 6.4 times targets was 60 billion, okay. Just 284. If they were being measured, I guess at the same multiple. Would it be the same multiple? Yeah, like using a 6.4x multiple. Actually, what is Walmart? Just do revenue multiple. .11. Okay, so I think this is actually even less. Let's just times 4, right? So if we use the run rate revenues, the run rate revenue is actually less than, it's greater than the market cap target's currently trading at. Okay. Yeah, this seems like an interesting investment opportunity. Just based off the market cap. Yeah, so revenue seems to be somewhat slowing down. I think it would be helpful to understand how it seems like the income story is telling us right now there is some struggles company. So cost of sales, and then SG&A expense. $18375, 5486, and it'll be 149 5316. Okay. Okay, gross profit, yeah, it's about the same. Oops. Seems to me it's somewhere in the 30 to 40% range. Maybe like the 35% range. $3.5 times. Yeah, I think it's 35%. 28%. Damn, man. I need to. Yeah, maybe it's not. I'm like multiplying stuff in my head. Okay, SG&A expense, depreciation and amortization. Okay. So this will be 616 and then 639 operating income. So yeah, there's a $1 billion decline in operating income. So margins here don't look that great. $27.2. Yeah, I don't know where they're seeing the gross margin be that high. Oh, by sales. Okay. So it's not total revenues, but just sales. Comparable sales change. Okay. Interesting. Okay, so they do have February 3rd sounds like Q4. It's Q1. And so let's say this will be February 3rd, 2024. February 3rd, 2024. Right. So be Q1 will be March, April, May, June, July, August. Okay. Yeah. Yeah, how do Walmart they did it by unit counts, so retail square feet at period, and not necessarily I wonder if they have like a sales per square foot. $64, it's not bad. Beginning store count, opened, closed, ending. 1955, 10, -9. 196, 13, -1, 1978. Okay. Number of stores and retail square feet. Okay. Or more square feet, 50,000 to to 169,999 square feet. Okay, I just realized that I think probably the one in College Park, Maryland is included in the closed. That is unfortunate. But that was definitely, I feel like, in the 4,999 or less square feet business. It seems like that's the one that was closed most. Actually, no. Two, 7, 3. Okay, so I guess this would be 5 stores here, and then oh shit, this is confusing. Okay, I have to compare these two numbers. Although, I guess that balances out. Okay. I'm confused now. Get these numbers. But let's try, okay. 273 1559 146. Okay. Four 48824 195050 4404. So this would be November 48824 192877 4207. 48824 192908 4207. Okay. Oops. Got it. Oop. Total. $248,278 939 245 908. Okay, so 404 824. There we go. Okay. So this is in millions. Let's compare this to. Wait, is this in millions? In thousands. Okay. think with Walmart, their square footage, yeah, this is all in millions, 270, yeah. Oh wow, so just US alone, that, I mean, their square footage here is a lot higher. Okay, so even though I associate Target with like a higher end almost, like a Target sort of compared to Walmart, the operating income for Target does seem to be lower in terms of margin compared to Walmart. Maybe that's like a scale thing, like a scale economies thing. I wonder if there is like a gross, I wasn't able to find a gross margin here. Oh, gross profit, okay. I guess total. Margin. (24.2%), and then okay, 24.2%. It's just 24%. Okay, I guess from a gross margin perspective then, I see. Okay, gross margin perspective, oops. Target actually is a bit higher, 4% higher than Walmart, but let's take a look. Operating income, I want to make sure I have the right number. Sam's Club, oh, I don't want to exclude, okay. I'm gonna get rid of this because this is, I'm essentially double counting there. $593, International, and Walmart. Maybe there's like an inter-segment thing going on. But yeah, this is not adding up. $4,981, right? Yeah. $1,204, 1,117. Yep. Oops. $634,593. Okay. Yeah, in that case, I'm not entirely sure why those numbers are not adding up. Okay, I see, that's why. That is why. All right, operating income. So there's this corporate and support line item that is missing. 5. Oops, not percent. Negative 489. Oh, 565, 489. Oops. 565. That's 6708. Okay. Gross margin. Okay, yeah, it's telling us the interesting story here. I'm gonna take a look at Costco as well. See what Costco does. I'm gonna add that here. This is Walmart. Oops. Edgar search. Let's see, how's the stream doing, by the way? I wonder what time it is. So it's only been an hour. Damn. Feels longer. Okay, Costco. Wholesale Corp. About $1 billion in membership fees. Wow. Okay, so this actually ends 12 weeks. Yeah. So they end in November. Weeks ended. Okay, foods and sundries. It's a sundry. I don't know. Non-food. Oops. Businesses. Thousands. So 77. Okay, I wonder, I don't think Walmart broke down how many members they have for Sam's Club, right? Oops, yeah, that might have been too much. Okay. Costco. Yeah, I like the way they broke up revenue here. Oops. So this is actually, okay, this is pretty cool. I could just select the date here, but nah. November, call this what? 24th, 26. So this is 26, and then this will be the 24th. Yeah, there we go. Okay. Nice. So food and sundries, non-foods, fresh foods, warehouse, ancillary, other businesses. Okay, total net sales 25. Okay, 23024 14766 732811599. Okay. Two 1 8 1 5 3 4. Yeah, I want to say the margins probably aren't great. Gross margin, yeah, 11%. I mean, that's not compared to Costco. Sorry, not Costco, but compared to now I'm trying to think, like, but they also get $1 billion in basically cost-free membership. All right, if you compare this to Walmart and Target, Walmart was, I think, a 24% gross. Target was around 28, 26. Let's see, actually. 2196 divided by 62151. Yeah, it's still actually pretty low compared to .5% margins that Target and I want to say maybe Walmart isn't getting it as nice. Oh, okay, they are. Okay, so Target does get a higher operating income then, like an operating margin, it seems like. If you compare 4.5%, they just do less in sales. Oops, let's see. All right. I mean, Target also has like pretty much half of Costco's members. I shouldn't say sales. So more than half is less than half of Costco's net sales. And I guess that does show up in the operating income where half of that is essentially, yeah. Oh, God. Okay. Interesting to know. All right. So that was quick and easy for Costco right now. I'm just gonna leave that there. I wonder if there's time to go to fashion. Because I know, I want to say, I'm trying to think here. $6,000 divided by 4. 85% of my portfolio is concentrated in VFC. This one company that is in the business of selling shoes, jackets, apparel, North Face, Timberland, Vans, Supreme, but they sold that. Dickies, yeah, those are the big ones. We also have, I think, Smartwool Icelandic, that's one. Also, a bunch of backpack companies, I forgot their name. Jansport. Okay, so there's 11 brands. Interesting. Yeah. I gotta remember this stuff. Then Nike. Okay. Oops. I think like the big players in the shoe market. Oops. I think I might have added too many lines at once by accident. So in the footwear space, you have Nike, Adidas. Those are the big ones that come to mind first. And then I want to say you have the company that owns UGG. And I want to say UGG is one of them. I think there's also a few other footwear brands added in there. Deckers. Okay, Hoka, that's the one. Teva. Okay, Decker. Brands. Adidas. I think On as well. I think at some point, last time I checked, they were trading around in 9 million market cap. I think now they're even higher. Yeah, it seems like they've doubled since I saw. Damn, man. Yeah, back in 2024. I guess that's what I get for buying a company that's suffering, VF Corporation. It is trading at a 131 PE ratio though. Yeah, I have to think about, do I want to keep a VF Corp in my portfolio? I'm gonna take a look at the Vans Instagram. I feel like that brand name though as a whole is so strong. Ooh, Oversea Distillery. Oh, I know this. I have to admit, these Vans shoes look pretty interesting. The Mary Jane DS by Beatrice. Let me see. Vans. Excuse me. Let's take a look at footwear. It's not on here. Let's take a look. Vans Beatrice. OTW, off the wall. Mary Jane. So it already launched, it seems like. Shop all. Oh, it's sold out. Shit. Okay. Yeah, I actually think these are very interesting shoes. Digitally printed map of Haiti on the insole. Interesting. Okay. Ooh, I guess like retail outlets for footwear, like a Foot Locker. I don't know. Foot Locker, so footwear companies. Puma. Oh, Skechers. I totally forgot about Under Armour. Skechers. iMart Group. Adidas, Puma, Geox. Echo. Okay, so I don't even have Bug on here. Or Deckers. ABC Mart. I guess I did buy them at pretty cheap though. If it was 5.96 billion. Birkenstock, totally forgot about that. Okay. Let's take a look at Nike. Actually, I need to go take a shit and then I'll be back. Oops. Alright. Hello again. I am so tired. Probably gonna go sleep soon. But let's take a look at Nike. Oh wait, this is Costco. I swear there was a Nike here somewhere. Alright, if not, let's take a look at Nike. Okay. So there was a few different August 31st. Interesting. Maybe this is like a Q. August, September, October, November. Yeah, maybe they haven't reported Q3 earnings. So let's do 31st. Okay. But yeah, let's do footwear, apparel, equipment, global brand divisions. I think this is actually pretty similar. If we were to take a look at the run rate revenues for Converse, it's very similar to Vans run rate revenue, I want to say. But let's take a look at the footwear. Okay. 74623032 60314. Yeah, I think this makes it the total Nike revenues. So I think this definitely makes Nike the largest footwear company in the world. I mean, $7.4 billion in revenue. That's a lot. Oh, but there's a decline. Okay. So maybe this is like a broader market thing. You do see a slowdown in spending. Plus, oops. Sales to wholesale, global brand divisions. So gross profit. 5257, 5720% margin. Point. Ocean freight and lower product costs. SP. Selling overhead. Okay. Ooh, North America. Got it. Greater China. Interesting. This is pretty helpful. I'm not going to go into the details right now. I feel like that could be done another day. I'm going to just focus on high level stuff. Okay, they might not have anything here. Okay. $57, damn. I have to admit, their quarterly slide decks are pretty beautiful. They do not have a breakdown, unfortunately. It seems like footwear versus apparel. Let's see what's on the fact sheet. Oh, yes, this is exactly what I wanted. Okay, so this is also in euros. Footwear, apparel, accessories, and gear. Okay. So first quarter, 0, 2, 3, 9, 1, 1, 40. Second quarter, 3, 1, 0, 2, 1, 8, 3, 6, 4, 0, 5. Third quarter, 3, 4, 2, 1, 2, 1, 8, 3, 9, 0. Okay. 3, 2, 3, 9, 1, 8, 5, 3, 2, 8, 3, 0, 2, 3, 1, 9, 1. Oh, wait. Second quarter, 3, 5, 7, 3. 7, 0. Q3, okay. 7, 7, 3, 2, 2, 4, 5, 4, 2, 1. Five, 2, 7, 4, 5, 3, 4, 3, 5, 5, 9, 9, 5, 9, 9, 9, 5. Okay. 3, 2, 8. 1, 8, 8, 5. 3, 2, 8, 1, 8, 8, 5, 3, 2, 3, 9. Huh. Surprise. 3, 2, 3, 9. 3, 2, 8, 1, 8, 8, 5. Okay. Not too sure. 5, 8, 3, 2, 3, 5, 7, 9, 1, 8, 9, 2, 3, 7, 0. Okay, that's aggregate net sales. Got it. Three, 9. So it seems like there's stuff here that's not added to this. So more of Adidas's revenue does come from its factory outlets, it seems like. Okay, but they also sell more wholesale than direct to consumer. Okay, let's end it with VFC, then I'll call it here. Channel revenues, wholesale, direct to consumer, royalty. So I think this is in millions. So this will be in thousands. Just realized there might not be 31 days in September. Okay. Oh, they break it down to outdoor, active, work. Okay. Right, so maybe, September 2023. Top brands. Okay. Still positive operating margin, seems like. Across the board. Alright, I don't think that was the case. Okay, outdoor or active, I think that's the Vans. Outdoor, alright, it's still strong. Yeah, I think Bracken's trying to stabilize operating margin despite declining sales. Okay. I am going to, so brand revenues, the North Face, Vans, Timberland, and then Dickies. Okay, so North Face, September 2023. Okay, 128.8, 748.8. So this is in millions. Yeah, makes sense. Brand revenues. Okay. So I think maybe 300 million is not from, because I think total net sales was around 2.6 billion, 2.7. So it makes it 400 million. Doesn't come from, so channel revenues, segment revenues, organic. Right, so they have outdoor, active, then workwear, work. segment revenues, segment profits, operating margin. $658.7. So that was 2020. $1,713. It's very close, actually. Very, very close. Damn. Okay. Two. Okay, nice. Work. Okay, wow, so I'm surprised. How did they get this high? Oops. Nice. Lower inventory reserves. What are lower inventory reserves? Season goods. Okay, so inventory reserves. So this is like an accounting gimmick essentially. Loss based on expected discounts of unsellable products. So this can be used to artificially increase gross margin if inventory reserves are marked lower. This means the company expects to sell more full-priced inventory. Or less discounted items. Okay, so I think with that, I am going to call it. Yeah, I think with this, I am done for the day. I have enough time looking at Excel spreadsheets. But it is very cool to see that Nike today really dominates the footwear industry based on the 3 companies that we've looked at. When you're doing $7.4 billion in annual sales, sorry, not annual, but quarterly sales, excuse me, that is around $30 billion in annual sales of just straight footwear. I don't think is the does Nike have the highest footwear revenue in the world? Who is the second largest? Okay, it's cool to know though. Seems like there is 20 or 200 million increase, $1 billion decrease. Okay, nice. Okay, I went out. All right, so with that being said, I want to say thank you for tuning in. This was a very fun and interesting experience, but I will call this a stream. So thanks for tuning in, and I'll catch you guys in the next one. Peace.